It's been a strange year for Nvidia. The stock is up about 29% so far this year and is currently
trading around 180.
which sounds impressive on the surface. But when you zoom out, this has actually been Nvidia's slowest year since the 2022 bear market, when the stock fell nearly 50%. No massive rallies, no headline-grabbing doubles. And yet beneath the surface, Nvidia may be quietly positioning itself for one of the most important years in its entire history, 2026. What's even more interesting is that recent developments suggest this story may already be unfolding right now. Before we go any further, a quick disclaimer. I am not a financial advisor, and this is not financial advice. Everything in this video is for entertainment and informational purposes only. If you enjoy this type of long-form analysis and want to see more content like this, drop a comment below and let me know. Not that long ago, Nvidia was trading around $100. At the time, many people were convinced the AI bubble had burst. You heard claims that AI spending was slowing, that companies like Nvidia and Palantir would continue to fall, and that the rally was nothing more than hype. But that scenario never played out. Today, Nvidia trades near 180, down from its all-time high of 212, yet still heading into what could be one of the biggest growth phases the company has ever experienced. The AI bubble didn't pop. If anything, the AI era may still be in its very early stages. Most people still think of Nvidia as a gaming graphics company, but that image is outdated. Today, Nvidia is the backbone of modern AI data centers. More than 90% of Nvidia's revenue now comes from data centers, not gaming. Its GPUs are used to train large AI models, run inference, process enormous datasets, and power cloud computing services. Beyond the hardware, Nvidia provides a complete ecosystem that includes high-speed networking, CUDA software, and AI frameworks that make everything work together. In many ways, Nvidia isn't just participating in the AI revolution, it's enabling it. That's why the stock has risen more than 200% over the past 5 years. The long-term opportunity becomes even clearer when you look at global AI infrastructure spending. According to Nvidia and multiple industry forecasts, the world is heading toward a 3 to 4 trillion AI infrastructure build-out by 2030. In 2025, global data center capital expenditures are estimated at around $600 billion. By the end of the decade, that number could increase 5 or 6 times. This isn't a short-term trend or a speculative bubble. This is one of the largest technology transitions in decades, and Nvidia sits directly at the center of it. A common question investors ask is whether Nvidia could double by 2026. The stock currently trades at roughly 38 times forward earnings. That isn't cheap, but it also isn't extreme when you consider Nvidia's growth rate and its dominance in AI infrastructure. If AI spending continues along its current path, today's valuation could look very reasonable in hindsight. The key question isn't whether AI will grow, but how quickly and how broadly it will be adopted. One of the most important recent developments for Nvidia came from the regulatory side. On December 9th, US President Donald Trump announced that Nvidia would once again be allowed to sell its 200 chips to China. This decision sparked immediate debate, with some analysts arguing that allowing advanced AI chips into China could strengthen Beijing's technological capabilities. However, there are important nuances. These are not Nvidia's latest Blackwell chips, but an older generation. Earlier this year, Nvidia estimated that restrictions on China could cost the company about $8 billion per quarter. The H200 chips are significantly more expensive than the previously restricted H20 chips, with estimated pricing around $30,000 per unit. If even a portion of Chinese demand returns, the revenue impact could be substantial. Looking ahead to 2026, Nvidia is expected to launch its next major platform, known as Rubin, which will succeed the current Blackwell generation, while analysts generally expect this launch in the second half of 2026. Trial production has reportedly been underway for months. Historically, Nvidia has often delivered new platforms earlier than expected. If that pattern continues, the market could react quickly, especially if demand remains as strong as it is today. Wall Street remains overwhelmingly bullish on Nvidia. The stock is currently covered by 53 analysts, with 50 buy ratings, 2 holds and just 1 sell. The consensus price target sits around $262, with the highest estimates reaching as high as $352 and the lowest around $205. Notably, not a single analyst has a price target below the current share price. Demand for Nvidia's chips is still estimated to exceed supply by roughly 12 to 1, and AI adoption remains surprisingly early. In the US, only about 3% of companies have meaningfully adopted AI. In Europe, the number is close to 0. In Asia outside of China, it's still under 1%. And in the Middle East, adoption is just beginning. In other words, we may still be in the early innings of this cycle. So the real question is whether Nvidia is quietly setting up for a massive 2026, or whether all of this is already priced into the stock. That's what makes this moment so interesting. Let me know what you think in the comments. As always, this content is for entertainment purposes only. I am not a financial advisor, and this is not financial advice. If you enjoyed the video, hit the like button, subscribe to the channel, and I'll see you in the next one.